Thank you, everybody, for being here this afternoon on your lunch break. We have some materials to go through today about mastering the CFR. Melissa, if you wouldn't mind turning to the next page. The first thing that we have is just a general disclaimer. This is for educational information. It's our views as Bonadio, what we've seen in the CFR world. And again, if you have any questions, as Duran said, please feel free to reach out to us. The learning objectives, we're going to understand the changes and updates to the CFR and the software. We're going to review the new CFR electronic signature process. We've had a lot of questions on this already, as there's been some going back and forth with one of the state agencies saying we needed to sign electronically. We'll go through what those requirements actually are. We'll identify some common errors that we see in CFR reporting for you to look at when you're preparing yours to not have those questions back. We're going to understand and look at cost allocations. That's a big item with the CFR. We're going to look at how the CFR impacts our rates for the future, as well as navigating the software and streamlining, some tips and tricks to prepare your next CFR. I apologize, I should have introduced all of us. So today with me, I have Melissa Slater, who prepares, she's in our CFR preparation team. She prepares several CFRs every year, as well as she's had a significant amount of history with certifications as well. And then we have Christian Vertel, who's the manager with us. He, again, has significant experience on both sides and also has a tremendous amount of IT knowledge that we definitely take advantage here at the firm. And then Caitlin Sesniak is also a manager. She works in this arena as well, so she has a lot of CFR experience, and I'm going to turn it over to her to go through the first section.
Perfect, thank you. So I will be going over some of the changes and updates. First, starting with the manual and the transmitter letter were released on June 30th, 2025. They were released in August, and there was two major changes. So there was the removal of the CFR II schedule, and all CFR filers will now be filing the CFR II going forward. And then also that new e-sign feature, which we will go through in a couple slides. And then some of the other changes and updates that were there is mainly just the addition and deletion of some programs, new line item definitions, and program description changes, as well as the update to bad debt to now say bad debt expense and or credit losses. The Step 1 schedule is no longer required for the following programs. So the 3520 in OASIS, 2100 OMH, and the 3220 in OMH as well. One of the other changes is now the SED is requiring Schedule CFR IV, and there was a specific question added to this schedule asking if the CEO or the ED have completed the annual online CFR training. So it is important that that is now marked yes for those SED clients. And then if that is not being done, making sure that is being done on an annual basis. And then the DMH2 variance page now includes revenue as well as expenses. Okay, so now going through this new e-sign feature, starting with the reporting periods of June 30th, 2025 and forward, all of these certification schedules are now required to be electronically signed and submitted through the CFRS web, and that CFR II is no longer available. So going forward, all electronically signed. But the reporting periods ending between June 30th, 2020 and December 31st, 2024, CFR I, III, and IV are all required to be electronically signed and submitted, as well as CFR II is required to be electronically signed and submitted. However, that CFR II is not available for e-signature, so it must be manually signed and submitted for those reporting periods. And then going to reporting period December 31st, 2019 and prior, all certifications must be printed, manually signed, and then uploaded, emailed, or mailed. So if there's any questions, please let me know on that. All right, so the next slide is going to go over the 4 new roles that are added to the CFR web to be electronically signed, being the executive director e-sign role, the county director e-sign role, the CPA e-sign role, as well as the LGU CFO e-sign role. All of these have different features. So the executive director e-sign is just the executive director of the service provider, and this role will be able to e-sign CFR III, and IV. Then the county is for CFR III, as well as the LGU CFR e-sign role will need to be signed for the CFR III. And then that CPA will be the e-signature for the CPA or independent accountant for the submission of CFR II or compliance review. Acquiring and maintaining these e-sign roles is one person that is going to be assigned as your security manager. So all maintenance or modifications of any of these roles will be made by the security manager. So once that is set, any changes need to go through that security manager. So please do not wait. So figure out who the agency's security manager is going to be, as that is a very important role, as they need to go through and make sure that all of the specific roles are accurate and assigned. So the earlier that this is assigned, the better. So the software security manager needs to verify that the executive director e-sign role is accurate. It was preloaded to your agency based on the prior CFR information. So just making sure that that is actually accurate and that the executive director is also assigned as a submitter. And then also assigning that CPA e-sign role is important. So if the agency does not know who the CPA that will be signing the certification is, reaching out to see who that will be. And if they already have a CFRS user ID is important as well. And then if you already know who your CPA e-sign role will be, reaching out to them as well to make sure that you get their user ID so that they don't have multiple going through different agencies. And then just verifying that the county director e-sign role is accurate. Again, this was preloaded to your agency based on prior CFR information. And then also assigning that LGU e-sign role for governmental agencies.
Thank you, Caitlin. You're good, right?
Yep, I was going to ask if any questions. If not, I was going to turn it over to Bettina.
Yeah, thank you. And that's the biggest change. I think it's going to make things cleaner for providers going forward, with having us and your executive director being able to log in and sign the required documents. The biggest thing is, like Caitlin said, making sure that we have the right people assigned and we work on it sooner rather than later. You don't, for the 630s, you don't want to wait till the week of Thanksgiving when it's due. You want to make sure everything's working properly. So the next few slides, we're going to go through some common errors that we see and tips to kind of how to look out for these items. The first thing we have is missing programs on your CFR. From OPW, DD, and SCD perspective, it's pretty straightforward, but when you get into OMH and OASIS, it can be a little more difficult. On the OASIS side, reaching out to OASIS and saying, what program should I have on the CFR? On the OMH side, looking at the MHPD, which is the mental health provider directory, which tells you all the programs that you're approved, you're authorized to operate. Whether you did or not is a different story. But when the thing that we see the most is when OMH looks at a provider's CFR, are questions related to did you operate these programs? And I'll have a list of them. Incorrect program sites. Again, this is mainly on OASIS and OMH, but when you have significant changes in your programs, how are we ensuring that our site numbers are updated and accurate? From a units perspective, units are tricky. It can be very different and very significant changes from year to year. So I always look at the CFR manual to see what those measures of units are. So for instance, is it a full day? Is it a half day? Is it a quarter hour? Is it a full hour? To have those units. So looking at that, another thing, when you look at those units, compared to last year, some things, especially on the quarter hour versus an hour, if we had 16,000 units last year and we're about 4,000 this year, it really sticks out that we might not have properly accounted for the units there. And then revenue per unit, if we have revenue from managed care, we should have managed care units. So looking at the two, when you look at revenues per unit, does that make sense as well? If our rate is $100 or revenue per unit is coming out to 10, probably doesn't make sense. Just doing some analytics and high level review of that. And then the last item that we have on this page is missing detail for items over $1,000 on line 40. Why that's key, they're really looking at line 40, which is other OTPS, to see if there are any non-allowable costs on there, or if there's anything that was directly charged to a program that belonged in CFR 3. So really looking at that detail, making sure you have detail on that line. On the next slide, with CFR line 40, again, there are items on there that maybe should be reported elsewhere. The one that I've seen most lately is payroll fees. Having that on CFR 1, line 40, directly charged to the programs, it really should be in CFR 3. So ensuring that we have that proper. On CFR 3, another item that we commonly see is contracted services being on line 14. So I'm sorry, it should be on line 14 instead of on line 17, which is other. The contracted services other than legal, audit, and accounting, which are reported on line 6. And then at the bottom of this page, non-allowables, in my mind, every provider, every agency really has some sort of non-allowable. The ones that we see most are bad debt or credit loss. We see fines, penalties, if you're paying sales tax when you're tax exempt, employee recognition items that you do. I know some providers will put it on CFR column 9, which is the other non-funded column. If you don't have it there, you want to make sure that you're putting it as non-allowable on the lines. From a state agency and funder perspective, we're looking at this saying, how can an agency not have non-allowable? Really looking at it to say, what should we have on this line? And then the last line there, non-allowable fringe benefits for your executives. So 457 plans, personal use of autos, those types of things that are only allowed for certain individuals are non-allowable fringe benefits. For OPWDD providers, line 68B is very important from a transportation perspective. That's really where your rate is coming from. So when you are done with your CFR, one of the final things that you want to do is take a look at your line 68B and ensure that those costs agree to your transportation column. And it should agree to your transportation column after administration. Your administrative costs should be included. For OASIS and OMH, if you have prior year revenue, it really should be reported in your reconciliation statement and not on the prior year revenue line 86. The reason for that is it does impact your deficit funding, having it on the core schedule of the CFR. So you do want it, if you're a provider that has prior year revenue in this area, just ensure that you do put it on the reconciliation statement. And then the next few items really relate to financial statement reconciliation to the CFR. CFR 2A has your financial information. The state does use 2A to look at the overall financial health of an agency. They are doing some analytics and some ratio analysis based off of that. So you do want to make sure that that ties out to your audited financial statements and that your revenue and expenses on your reconciliation statement and your CFR 2A agree. You're reconciling it back. You have the correct audit opinion. And then some additional common errors that we see: pay rate reasonableness. Here at Bonadio, we do a very in-depth analytic tool. And the reason that we do that is we find these errors that maybe you're putting in a pay rate, putting in payroll and you slide a decimal. So I've seen where we have individuals being paid $1,000 an hour. Well, we know that's not right. We know that there was definitely a slide of the decimal, but we want to make sure that we're looking at those reasonableness of those pay rates to make sure that they're accurate, but the state will also come back to you on that. With the CFR, when you're looking at your whole CFR, there's two things to keep in mind: reasonableness and consistency. Are we consistent with our pay rates? If we're not, there could be something inaccurate in our filing. The amount of hours per employee. This is very important to kind of when you prepare your CFR 4, you get the information together to kind of sort it and look at those high hour individuals. Is it correct? Is our payroll system handling overtime appropriately? If it's not, we have to go in and do some adjustments. But if you sort your payroll information and really look at those high hour individuals, I think it will absolutely stick out to you. Making sure we're using the right position codes and the ratio of our position codes makes sense. On CFR 6, we are required to have our position code 601, 602, and 603 on there. It does not matter how much they're compensated or whether they're paid through a management services agreement, an independent contractor. We are required to have them on there. So take a step back, look at your CFR 6 to ensure that you have all of those individuals on there. As we talked about earlier, looking at those fringe for those individuals and the allocation of fringe rates. Organizations do it one of two ways: either direct charge on the fringes or allocating it. My preference is the allocation only because you're more consistent. You don't have these significant ups and downs. If you are allocating your fringe, it's important to look at your C-suite, your executives, to say, and pull out if you have a CEO that has a 457 plan. You need to pull that out before you do the allocation. So those non-allowable fringes that really should be on CFR 3, pull those out, allocate the remainder of the fringes. It really does to lead to more consistent reporting, as well as more consistency in your rates when they are determined. Again, it really comes down to reasonableness and consistency for the CFR. The DMH schedules, absolutely not my favorite, but they're necessary. The DMH schedule is being used by funding sources to really look at your deficit funding as well as your overall funding. The issue comes in that every provider has different requirements here. The DMH schedules are not looked at by your auditors. They're not really certifying that piece to it. I shouldn't say they're not looked at. We do look at them. However, we're not certifying them, so it's not as in-depth of a review. The important thing with DMH is schedules is making sure that you're reporting on the correct basis. Majority of the time, you should be reporting on modified basis because, especially for OASIS and OMH, they have different requirements. For OASIS, they fund you differently. They fund the expensed equipment. They're not funding the depreciation that comes along later on. It's really non-allowable. OMH would prefer that same situation. They usually do not fund depreciation unless it's directly in your contract. But really looking at those items that would be non-allowable. Where it gets a little tricky is when you look at your administration charge from CFR 3. OASIS does require you to take a look at that and say, in that admin, what is the depreciation in there? What is the interest component in there? You need to pull that out on the DMH schedules. Your deficit funding that you're claiming should be adjusted to the amount that you actually claimed. So your line 28 and your line 44 really should agree. And then the last item that we have here is DMH funding sources and allocation amongst the funding sources. For instance, if you have a grant that has a COLA to it, should that COLA be in your column or should it be in a separate column, and making sure that we're allocating the appropriate amount of funding to the various columns. The next item that I love to talk about is self-direction. And this is one of the most common things that I see on the CFR for self-direction is showing surpluses in self-directed columns. When you look at how self-direction is done, you're really looking at a person's budget. When you look at their budget, you're charging the self-hired services. So that's your 0422, which is your self-hired ComHab, your 0423, which is your self-hired respite, and your 0424, which is the self-hired supported employment. When you charge to that individual's budget, you're really charging salaries and fringe. So when you get to your CFR, that really should be the two items that you have in these columns, salaries and fringe. When you look at your IDGS, your OTPS and family reimbursed respite, as well as your housing subsidies, when you look at an individual's budget, those are direct costs that you're reimbursing the individual for. In that case, on the CFR, those 3 columns really should only be participant incidentals. And the same with your brokers, the budget's getting charged for brokers' salaries, fringes. A lot of organizations have contracted, excuse me, brokers. All of your other operating costs, so your occupancy cost, your food cost, if you have some, your overall operational costs really should be in 0421. So from a high level, when you look at your CFR, your 0421 will have all of your cost and may have should have a profit. And then your 042, the remaining of your CFR columns really should have a deficit. And why I say they should have a deficit, you're including the cost that you charge directly to the budget, but then there's administration component that's added onto it. So really, you should never have a surplus in any of these programs. When you have those surpluses, you really need to take a look at how you're allocating your fringe. Is your fringe rate too high? Do you need to adjust it in the future? But from a self-direction standpoint, really take a look at those individual columns. And then the last item that I have is analytics. It's very important to do analytics on your CFR. You could catch some of these errors. So for instance, if your pay rates are unreasonable, they're way too high or they're way too low, your hours are off. And it's important to look at those now because the CFR does impact your funding. You want to make sure they're as accurate as possible. The CFR software does have an analytic tool built into it under the reporting section. We internally developed a much more comprehensive one to really look at those key performance indicators and analyze it program by program. I know from my perspective, I largely certify CFRs, but I do this in-depth analytic on it. So I can find errors before they go to the funding sources. From a provider perspective, I do think you want to take a very good look at that so that you could say, okay, you can highlight any potential issues, reduce the amount of desk audit findings that you have, and really identify those errors. From our perspective, we are required to do analytics on the CFR as part of the certification procedures in Appendix AA. But I do think from a provider perspective, it's important to look at it as well to catch some of those common errors that we just talked about. And now I think I'm going to turn it over to Melissa to do the next section.
Thank you, Bettina. Hopefully everyone can hear me. So we're going to talk about cost allocations a little bit. They are can be highly complex, and they are probably one of the more important things to make sure we're doing in accordance with the CFR manual. So the first one is obviously the more we can directly charge to programs and columns, the better off we'll be when it comes to preparing the CFR. Additionally, Christian's going to talk a little bit more about tips and tricks, but this is one of the areas that I always recommend clients look at when they're looking at ways to ease the CFR preparation is, are we direct charging everything that we can? And is our general ledger set up to allow us to do that? Because the more we track based on direct cost right in our general ledger and trial balance, the easier the CFR prep is going to be. And the fewer allocations we have to make to get from our financial statements to the CFR, the better and the easier it's going to help us speed up the process, because we all know CFRs can take a lot of time to prepare. So here are just the list. The CFR manual provides a lot of guidance on CFRs. You can see there's 5 different appendices that talk about allocation methodologies. What are the appropriate and approved allocation methodologies for various areas? You know, you can see OPWDD has its own set of allocation methodologies. And then there's a whole appendix that we're going to cover in a little bit more detail on time studies. So the first thing is, you know, we should try to follow the CFR manuals. So that should be our first go-to. Look at the CFR manual, let it tell us how we should be allocating those costs. If you are using a methodology that's different than in the manual, we need to make sure that it's reasonable and consistent. I feel like that's the theme of today's training, reasonable and consistent, that you have documentation of why you determined that your methodology is reasonable. And then you have to make sure the information is readily available so that you can consistently apply it year over year. We find that overly creative allocations can be very difficult to manage and very time consuming. You know, funders might come in and say that they are not reasonable and potentially lead to disallowed costs under regulatory audit. So again, you know, follow the manual. If you determine a different methodology is reasonable, you know, we just need to make sure that it's being documented appropriately in case you do have your CFR reviewed. Where we typically find the most allocations are breaking out costs on the CFR into the natural classification as opposed to being one line on the financial statement. So, for example, sometimes people have a residential program admin line that they allocate, or just a program admin line that they allocate at the bottom of the functional expense. And, you know, we have to break that out and blow it up so that we report it in the natural classification on the CFR. The key thing here is make sure your files are logical, you know, that other people can follow them, that there is a method that's documented and you have an audit trail. You know, I always suggest leaving, you know, notes or a point, and it's an Excel document on one of the tab, like step 1, step 2, step 3, just so someone else can come in and prepare that CFR in a future year, and they know what you did. Or again, under audit, you can document what you did and why it's reasonable. The other thing here, you know, again, are we over allocating? So, you know, do we have $100 worth of expenses in an account that we're allocating to 10 different columns in the CFR? And is that really reasonable? Or is it taking us more time to allocate than we would if we approached it in a different way? And that kind of leads to the last point on this page about how many allocations are too many. You know, are you allocating, you know, you get your financial statements done and drafted, and then, you know, are you posting 20, 30, 40 allocations to get your financials from, you know, your financial statements to your CFR? And in which case, is that too many? I can give you an example. I worked with one client and they posted an allocation entry to break out one cost center. The entry itself was 1,500 lines long. And when I went in and said, okay, let's get rid of the decimals and get rid of everything less than $1, it removed 500 lines from that allocation. So when we took it another step and said, okay, let's move anything less than $10, you know, our $1,500 line entry was then dropped down, you know, to less than 500 lines. So really, I think people have gotten into this methodology that we have to allocate every dollar. And I think it's time we really need to step back and look at what is reasonable. And, you know, are we really approaching this in a reasonable manner? And the other thing with allocations, we really need to think about them ahead of time. Honestly, I personally think, you know, even anyone filing a 2025 CFR, so definitely it's kind of late for our June 30th. And honestly, it's kind of late for the December 31st, 2025 CFRs. We really need to think about these methodologies at the beginning of the year and during the year to make sure we have the proper documentation and support when it comes time to prepare our CFR. You know, if you decide you're going to allocate this person's wages based on time studies, well, you decide that on December 31st, it's already too late because you don't have the necessary documentation and haven't done the necessary time studies to do that allocation. So speaking of time studies, I know this is small. I clipped it right from the manual, but the CFR manual has very specific guidance on time studies. You know, you have to make sure that you encompass 2 weeks of every quarter. So that's why, you know, if you're going to do a time study, you need to know in January, February that you're going to do that allocation based on time studies so that you're setting up those quarterly time studies to document your work so that you have the documentation to allocate the time accordingly. You know, each week selected has to be a full week. It has to be, you know, Monday through Friday or Monday to Saturday or Sunday. You can't do Monday to Thursday one week and then Thursday to, you know, Sunday the next week. They have to always start and be consistently the same full week. You must select your weeks equally distributed among the months, and you cannot have the same 2 weeks in consistent quarters. So you cannot pick the first and second week of quarter one and quarter two. You really need to make sure you're rotating it. It's the first 2 weeks of quarter one, maybe, you know, the third and fourth of quarter two, the fifth and sixth of quarter three. You really need to make sure that they're planned. And they have to be provider specific, and they have to be done in the year you are doing them. So obviously you cannot do a time study in 2026 and apply that methodology and allocation to 2025. So very specific guidance on how to do time studies. I know most of the clients I work with, you know, we try to keep them, the time studies, as minimally as possible, direct charge everything that we can. You know, it's even better if people are clocking in and out and charging their time that way. You know, if they move between residences during the day or classrooms, if you have an FCD program, we really recommend that direct charge. And there is 2 specific exceptions to using time study methodologies. So for cafeteria staff, housekeeping, janitorial staff, sorry. If you look at Appendix J, they have different allocation methodologies that are acceptable for those areas.
Melissa, sorry.
Yep.
There's a question in the chat. Do you have to use calendar quarters, or can you use a quarter of time following when a survey occurs?
I don't think there's a requirement that it's based on calendar quarters, but I think, again, it has to be reasonable and you have to be consistent. So you can't pick fiscal quarters or whatever this year and then next year do calendar quarters. You really need to make sure you are consistently applying your methodology.
Thank you.
And please, everyone, I know everyone has mentioned it before, but make sure you're putting your questions in the chat. We'll try to get to as many of them as possible. And if they are too specific that we can't answer in the training, we will follow up with you afterwards. The next couple of slides, I'm just going to briefly talk about, you know, what the CFR is used for and its impact on future rates. So, you know, each state agency uses the CFR to assist them to manage their costs and providing essential services to vulnerable populations. But they all do it a little bit differently. So understanding how your state oversight agencies, so, you know, are you OPWDD, OMH, OASIS, understanding how they manage or use your CFR data is important, and really is an essential part of preparing a complete and reasonable and accurate CFR. And Bettina touched on it a little bit earlier, but it's also important to note that they are using the CFR to determine fiscal viability. So that CFR 2A becomes incredibly important. They're looking at that data. You will get questions on it based off of what you put in there. So please make sure it is accurate, obviously. But they are looking at viability using the CFR now to, in addition to setting rates. So SCD uses the CFR to manage its tuition rate-based process and setting the prospective rates. Failure to file timely CFRs does result in a delay in that reconciliation and prospective rate process. And if you get too far behind, it's going to impact the rates and your payments in the future. So if you don't have, accurate or timely rates out there, you could face not penalty, but school districts and the vendors you work with might not pay you timely. And we're seeing more and more of this as, times are getting harder. The money isn't flowing quite as freely. So we are noticing that, especially some school districts are starting to not pay as timely if the prospective rates aren't available. So it's something just to keep in mind. OMH uses the rates to reconcile some of its Medicaid funded programs like residential treatment facilities, but it also uses it as management of the claims process for deficit funding contracts. So really need to make sure we're reporting our deficit funding contracts accurately and properly in the DMH schedules to get those contract closeouts and get the payments that you deserve. OASIS again has primarily net deficit funded contract reconciliation. However, there are some Medicaid funded programs that have individual provider rates that are unique and some regional rates that are developed in part by using the CFR data. And for those of you that have CCBHC programs, the intent is that OMH and OASIS will be using the CFR to rebase the rates for the CCBH program. We don't really know when that's going to occur. I think we have to wait till they have enough data in the system so that they can set those rates and set them with a reasonable rate reconciliation process behind them. But we do think that is coming probably sooner rather than later. And then OPWDD uses the CFR to set both individual organization rates as well as regional rates, regional rates and rebasing the rates. There are a few contracts out there that OPWDD still requires the DMH cleaning schedules to be completed and some minor net deficit funded contracts in that reconciliation process. So that is still out there, where they're holding back until the final CFR is filed and those rates are reconciled. And then DOH is using the CFR to develop regional rates for their waiver programs as well. I think it's also just important to note there's a lot of information here. There's a lot of detail. The CFR is a very detailed document. And it's important that we don't get lost in those details when really all we need is a reasonable path forward. And if there isn't any questions in the chat, Bettina?
There is no questions in the chat.
All right. I'm going to pass it on to Christian, who is going to talk about software tips and tricks and wrap us up with some ideas and suggestions for improving the CFR process.
Absolutely. Thanks, Melissa. As you know, this is one of our last kind of major deadlines after we finish the financial statements is for our fiscal filers. That's going to be our 12/1 for our calendar year. It's June 1st, and we don't have another deadline for quite a bit. So I definitely want to get through this as quickly as possible, right through the CFR preparation process as quickly as possible. So the good news here is that the software really has not changed much. We went over the transmittal letter for the June 30th, 2025 filers here. We don't anticipate anything major coming out for the calendar year transmittal letter. It's going to be more of the same information there. So there's not really any new changes for the software. So it's going to be kind of business as usual there. One thing we always like to remind people of when you're starting out your submission is you want to always select the most recent version just in case there were any last changes from those pesky review letters that we get, just to make sure that we don't get those again. and just making sure we have the most final version. And the other tip, the trick there we like to remind people of is doing master data only and unchecking the CFR4 and 4A data. What that does is it makes sure that it doesn't essentially include the prior year information in your current year data. A lot of the times it's not comparable, and you just end up with more errors than it is helpful there. So we do recommend unchecking that. I do recommend including checking the CFR1 program site data. What that's going to include there is your number of days site open, your program square footage, things like that, but it won't include the revenues or expenses included on the CFR1. So that's one thing we do recommend checking there. One of the biggest time savers that we recommend is being able to set up our internal spreadsheets to be able to import the data. There's a number of spreadsheets that can be, or a number of schedules that can be imported, including your CFR 1, 2, 3, 4, 4A, and even the DMH schedules. Being able to import the CFR 1 and 4 we find are the biggest time savers because there's so many schedules out there, so many lines, and going through and entering information manually can lead to key typing errors where you're not going to be able to work out the reconciliation in the end, and it's just tedious and takes a really long time. So being able to import the data is a very worthwhile tip that we recommend. We do it for just about all of our preparations now. The only exceptions I would say is if you have less than 5-6 columns there, it's really not worth it there, where it does take a little bit of time to set up, but we import just about all of our CFR1s and all of our CFR4s for the CFRs that we prepare on a year-to-year basis. And we found it really does help us save time. It eliminates errors and can really help you in the preparation process, especially in the CFR4. The CFR4 is something that's usually pretty easily manipulatable. It's pretty easy to get it in the format that the import recommends. It's pretty easy to recommend. We are always available for questions if you are looking to see what it would take to import your data, but it saves a ton of time. So that's our biggest recommendation there. One of the other things that's more of a trick than it is a tip here is that when you're doing your DMH schedules here, that you are able to transfer the information from your DMH1 to your DMH2. So when you're going through, you just have to go into your DMH1 schedule and you are able to transfer the information from your DMH1 to DMH2. It does not fill out the back claiming portion of those DMH2 schedules. But it does move the information in. We're able to do the calculations necessary to be able to fill out DMH2 for you. One thing to remember with that, if you do have to go back into your CFR1, that you will have to go back into the DMH2 or DMH3 to manually update those as well for the changes you made. The DMH2 and DMH3 do not automatically update like DMH3 does. And one other quick thing not on the slide that we've been seeing as a firm is that the CCBHC does not have all the works out of it yet as far as the implementation as a shared program, where we've been seeing issues with the updating of the DMH1 informations on the DMH2 variance page. So if you are seeing that, you're not going crazy. It is a common error that we've been seeing, and it's good to recommend or good to reach out to the ITS part of OMH to get that fixed. We've had to do it with several CFRs that we prepare, and it just seems to be a common error that keeps popping up. So if you do have a CCBHC and are having trouble in that variance page where you're not able to figure it out, it's not you, it's them.
Question?
One other thing.
Oh, sorry.
You got a little more to cover on that last slide too.
Okay. I had, on this last slide, we had a couple questions.
Okay.
Can I go through them with you?
Absolutely.
Are there instructions on how to import the data? Or is there a template that can be used to import the data?
Yep, absolutely. So importing the data, it really requires it to be in a particular format, and where you can find that format is if you go under the CFRS web. There is a section of it here. I'll see if I can remember off the top of my head, but it is available as long as you have CFRS web user access. I believe it's called the CFRS web user guide, and within that, it's a PDF that goes through the whole process as far as importing, and it has several templates in it about importing the or what the particular schedules or the format for the data needs to be able to import those schedules, and even has examples within that. So it is a very helpful PDF document. I have it saved to my desktop for when I'm doing my preparations, and has the detail and information necessary to be able to import any of the schedules that you can import. So it's a very helpful use or resource for that.
And I'll grab it and put it in the chat as well. And then Christian, there was one other question, if you don't mind. It wasn't on yours, but I'll address it. With South Direction, on the housing subsidies, there's a revenue piece to that. So you may have a surplus in there because of the administrative fee that you do get for that piece to it. Thank you, Julia. I always forget about that piece. It is a relatively, they've been doing it for a couple of years now, but so that will be an exception to the rule for having surpluses in those other columns. And I think we're good now, Christian.
Just one other quick comment on that is one other common error we see with housing subsidies is that should be reported on your line 40 as opposed to a lease or rental cost. That's one other tidbit that I do like to include whenever that program shows up. So thank you for bringing that up. And while we were doing that too, that gave me the time to find out where that information is within CFRS Web. So if you click on your menu within the platform, it's that help button at the very bottom there. So it's pretty easy to find, but we'll also make sure we put that in the chat as well for anyone who's looking for it. And then the last other tidbit of information that we like to include, this is relevant for just about every schedule on the CFR, is there's a button typically in the top right while you're preparing that lets you review prior information. I always like having it checked just to make sure what I'm inputting is accurate and it's comparable to the last year. And if it isn't, then understanding what the cause of the change might be, or if it's not comparable. But I highly recommend having that one checked while you're filling out your current year information or kind of scanning through the CFR to make sure everything's right. It's extremely helpful to be able to see the last fiscal year next to you, or last CFR next to you. Now, anyone who's ever prepared a CFR knows this top line. It's a daunting and time-consuming process, especially trying to line everything up, figuring out how everything maps, and getting the information into the platform. It's not a very, or hasn't always been a very user-friendly process. Getting transition to CFRS Web has certainly helped, but it does take a lot of time. So we're going to go through kind of some of our recommendations for how to best align your financial system and your kind of organizational policy and procedures with efficient CFR reporting. And as Melissa alluded to earlier, not all of these are going to be possible at this point in the preparation process, but starting to look to next year that we have to file for, we might be able to start implementing a few of these to save some time and stress. So one of the most time-consuming parts is doing your CFR4, which is your personnel information, which includes your hours, wages, overtime amounts, things like that. Being able to reconcile from your general ledger system to your payroll system is time-consuming and a headache most of the time, especially if the payroll reports that you're getting aren't necessarily in the best format. So being able to find out what you can do in the meantime to be able to get that reconciled is good. We recommend going through and doing a reconciliation in the middle of the year, if possible. If there are any wage movements that we're making that are excluded outside the payroll system. So typically these are allocations of employees, and then documenting them and keeping a detailed record of what those changes were and what the basis was is very important. Just knowing what the differences are. Like I said, reconciliation is the most important part of that process, and knowing that our payroll system and our general ledger system agree, and figuring out by department kind of what those differences are and why we're doing them and if we should be doing them. We recommend reconciling quarterly for these CFR4. It's a significant lift, but if you can kind of start that burden throughout the year, then when you get to the end of the year, there's not going to be any surprises. You're going to be able to see it a little bit easier. If you can't do it quarterly, even semi-annually there, it'd be better, but just not waiting until the end to try and understand what those differences are is our biggest suggestion there. When it comes to reviewing the position codes set up within our payroll system, I think there needs to be some level of collaboration or coordination with HR as far as if an employee had got reassigned in departments where they have a new position, they may not be working in the same as what they were last year, making sure that gets changed and updated with our payroll system. So there needs to be some level of communication between our HR and finance and payroll department, making sure that we have accurate position codes assigned to our employees, where if someone who is doing more direct support or clinical work got moved up into administration role, we wouldn't want them recorded in the same department. We want to make sure that that gets updated and that we're reporting our employees accurately. And we should be reviewing these employees, I'd say, with the same regularity as what we're reconciling with, just going through and making sure that as we go through our list of names that we have the right people in the right roles. And Bettina alluded to this earlier, but just ratio of employees there as far as making sure we have administration and programs, appropriate amount of clinical staff, appropriate amount of direct care staff, and whatnot. So reviewing those somewhat regularly to whatever extent that you can set up your general ledger to kind of match the CFR listing codes, it's helpful, but we can understand that could be a significant lift depending on the abilities of your general ledger software. Some of them do make it relatively easy to align. We do have one that I know of that actually maps their general ledger system to the position code for the amount of wages. So when it comes to the time to do their CFR reconciliation or their CFR 4, they're actually to pull it down directly from their general ledger rather than relying on some of the payroll data there. But it's not required. But that's one tip and trick we recommend for kind of making it a little easier. And then the next bit we like to talk about is just having an open discussion with IT to seeing out what efficiencies we can leverage or what efficiencies they can help us out set up throughout the year to set up these allocations or things to automatically run so it's not a manual process, and so we don't have 18 different Excel sheets set up or to allocate out our different employees, and making so if IT can help us kind of streamline that process on CFR 4 and even CFR 1, that's better. Like I said, the import process for CFR 1 and most of the detail lines is relatively easy. It's just a matter of setting up something that can translate the information that we're getting from our general ledger system into the CFR required input system, but it's really straightforward. They have code set up essentially for your programs and for any of the information you need to go in. So to having a discussion with IT to help us kind of translate that is extremely helpful and can alleviate a lot of the time and headache from us. Another thing, just kind of looking into our general ledger system is kind of aligning what our chart of accounts looks like to what the CFR says. I have seen I think just one organization has ever done this, but they had essentially set up these CFR codes or CFR line items. So your line 16 for salaries, they had a salary department, they had a vacation, but the descriptions directly aligned with what was linked to what was within the CFR, and that made it a lot easier to not only on the certification side, but also when they were doing the preparation side, as far as there's a 1-to-1 ratio where this general ledger department goes in this line. Of course, there are obvious exceptions there for things like not allowable costs and other inputs that you would have to do, but just better aligning those to make sure that we don't have to spread out one account into 5 different lines on the CFR because we're not tracking it throughout the year, where if we track those throughout the year and they align directly with the CFR, it's a little bit less of a burden for us. And the ability we have, like I said, to utilize the software allocation abilities, where if our payroll system or general ledger system can do these allocations for us throughout the year, where if we're trying to allocate a program administration out to our, say, example for our residential programs, if we're able to actually do that within the general ledger system, we don't have to, it's one less thing that we have to do as a part of the CFR preparation process, and can make our lives a lot easier. So any ability that our general ledger system has or payroll system has to kind of do this information for us is huge. With all the technology out there today, it's a lot easier than what you think, and a lot of the general ledger systems do have the capabilities to be able to do that. So any discussion we can have with our general ledger system, our accounting system people, that are helpful. And being able to utilize a report writer is another helpful feature that we've seen, that where they're able to spit something out of our general ledger that pretty closely aligns with what the CFR says is helpful. Again, Melissa touched on this last one earlier, but just don't lose sight of the big picture. Are we allocating small dollars, and are we overthinking things? We've seen before where there's a general ledger department where there's only about $100 or so that gets spread out to 50 different departments, where it's probably not necessarily worth our time or effort to be able to spread those out. So just taking a fresh look at some of these allocations that we're doing and not looking at some of these smaller dollar things can save us some time as well.
Great.
All right.
Thank you, Christian. I don't see any other questions in the chat, but if you have any questions, please feel free to reach out to us at any time. We're always here. The other item, we are having some technical difficulties with getting the import information in the chat. So when we send out the recording of this, we will attach that, the instructions at that time. But again, if you have any questions, please feel free to reach out to us. Thank you very much for spending this lunch hour with us, and looking forward to working with you in the future. And the slide deck will be coming from, it's Bonadio Marketing Communications, so it'll be in your email.
The slide deck and the user manual will be coming out following this presentation.
Thank you. Have a great day, everybody.
Thank you.